So how do you get the best rates in DSCR? DSCR is like no other loan out there. You have the conventional conforming loans that within a half a point, everyone has the same rates, the same terms, even the same closing costs. DSCR is not that way. And today we're going to show you the $1.8 million mistake some investors make. So why is DSCR so different? It's because it's like the Wild West. Like I said before, the conventional, the Fannie, the Freddie, it is one underwriting guidelines. It's one computer, maybe two, that tell everyone what is approved and what isn't, and where the rates come in are all within a bracket. DSCR is completely different. There can be 10, there can be 100 different lenders out there making their own guidelines, looking at their own and creating their own rate sheets. So it does not matter where you call, what you do, you're going to find different rates for the same information. I'm going to go through an example today. Yesterday, I went on to one of our search engines. As a mortgage broker, we have a program that allows us to look at different rates from different companies. So they have anywhere, depending on the day, 10 to 15 different lenders out there who put their rates on this search engine. I go out, I put the same information in, the same credit score, the same DSCR, the same loan to value. Here's what I find. The best, 7.04 on a 30-year mortgage. The worst, 9.46. The majority of everyone was somewhere in between. A lot of them were in the 7.9 to 8.25. So as you see, the same person calling around could find anywhere between 7.04 and 9.46. And the biggest reason is, like I said, it is so segmented. It's so different. There's companies that just sell through their lending sources, their brokers, and there's others that have just one product. So this is all they can offer. And they spend a lot of money on marketing to make sure that everyone knows that they do DSCR loans. And then guess what? They charge a lot more. This whole video is all about showing you how to shop around and why to shop around. The why is because it's going to save you not only money, but save you deals. Because if you go into a property and look at somewhere between a 7.04, rate compared to even, let's just say it's the 9.46. One property may qualify because of the DSCR, because at 9.46, you're paying hundreds of dollars a month more in interest. Just to show that point, let's go through all the numbers so you can see on a $300,000 deal with these three numbers, 7.04, 7.99, and 9.46, how one of these costs you $1.8 million more. So now remember, we're talking about $300,000 loan. We're talking the same credit score. We're talking the same DSCR, the rents that create the DSCR ratio when you put everything in. And we're talking the same loan to value. So at 7.04 on a 30-year mortgage, the payments are $2,003 in some sense. Monthly, your principal and interest is the $2,003. Now that same date, the second best rate was 7.99. And on a 30-year mortgage, your payment is $2,199. That's $195 more per month than the 7.04. So, and some people are like, that's not that big a deal. It could be if your rents are $2,100. So at 7.04, you actually would qualify for a DSCR loan. At the $2,100 at 7.99, now you've gone where your DSCR ratio is less than 1, and you may not qualify, or at the very least, you're even going to pay a higher rate. Now let's go to the other extreme, the one who is charging the most, and it's actually a lender that advertises a lot, at least to mortgage brokers. Their interest rate was 9.46. And at 9.46, their payment was $2,513. So that equates to $509 more than the person who got 7.04. So the same person with the same property, same loan amount, same credit, same loan to value, could pay up to $509 more per month. So now let's just look at these numbers so you could just see where the cost of credit, we call it return on credit, is. Where some people have it easier in real estate, some people have it harder. A lot of it has to do with leverage, how much you pay. Compared to the top, the 7.04 and the 7.99, it's over $70,000 more you pay on that property over the life of the 30-year mortgage. But it gets worse. If you're any kind of investor, you're going to have 3, 5, or 10 properties. So you multiply that. For 3, you're at $210,000. At 5, you're at $350,000 extra interest you're paying the bank. This money could be in your pocket instead of the banker's, but just because some people don't shop around, don't look around, and we're going to show you exactly how to shop around and what to ask for just to make sure you get the best questions at the end of this. But I just want to make sure you understand the numbers, why you would even do this. And that's 7.04 to 7.99. That's over $700,000 if you have 10 properties. So if you have 10 properties and you make this mistake of not shopping around, it could cost you 700 grand or even sometimes more. Now the more comes because you go to the wrong mortgage company, the wrong lender, and they're going to offer you something like the 9.46. There, that one property compared to 7.04 is going to cost you, get this, $183,000, one property over the life of that property. Remember, it was only $300,000 loan. You're going to pay an extra $183,000. Just think about what that could do to your retirement or just put it back into your life. By not shopping around, it really makes investing hard for some people and easier for others because they're just paying less. They have more money to put into the next project. So let's look at this 9.46 compared to 7.04. On 3 properties, you're looking at an extra $550,000 in interest you're paying out. On 5 properties, you're looking at $917,000 extra you're paying out. And on 10 properties, $1.8 million. You just let $1.8 million out of your life into the bankers. That's why it's important to shop around, because DSCR loans are unlike anything else. The spreads are big. Conventional loans, yeah, you might get a half a point, you may even get 3/4 a point different, and that's big. But DSCR loans, we're seeing even larger spreads. Now I understand shopping around is not fun. We have a person here in our office who's just shopping for a car. She's so nervous because she understands she has to talk to a salesperson, and what are they going to say, and are they going to just take advantage of her, all these other things. We know that same feeling comes when people are shopping around for mortgages. So we want to give you some questions to ask just to make it easier. And remember, if they're not going to give you a quote, if they're not going to give you what you're looking for just with a simple phone call, at least within a range, keep calling, find the ones that will. So first of all, you have to make sure you're asking and giving them the same information. So make sure you have, what is your loan to value? What is your credit score? Is it a purchase or refinance? You also need to know what area, what zip code is the property in, and what kind of property are we talking about? Is it a single family? Is it a duplex, fourplex, or some other kind of special use property? And if you know rents, that's even better. Take that information before you start shopping, even if it's just an example. Just say, hey, just like I did, I'm shopping around, I want a $300,000 loan. I'm going to put 20% down. How about if I put 25% down? Because there is a big break between 20 and 25. If I have a 680 score compared to 780 score, you're going to see a big difference in rates there. But go in with a set of questions, even if you don't have the property, to ask these lenders just to start finding out who the good lenders are. Here's the information you should get from every lender. Of course, what is the rate? Number 2, a DSCR, almost all of them have some kind of prepay penalty. And you want to know, is this a 1, 3, or 5 year prepay penalty, just to make sure it matches and that you're consistent when you're talking to people. Because you'll get better pricing on a 5-year prepay than you will on a 1, 2, or 3-year prepay. You also want to know what their closing costs are. Are they charging you 1 point, 2 points? Typically there's an appraisal, underwriting. All of those numbers you need to put together to make sure you're talking apples and apples. Because one may be a 1/4 point higher, but they have a bunch of other fees or maybe charge you an extra point. Make sure you get apples and apples with everyone you're talking about. Also make sure you ask them, is this a 30-year product, if that's what you're looking for? Because some people will give you like a 3, 5, or 7-year rate to get you the best rate to get you in. Make sure you're talking apples and apples. So if you want an adjustable, great. Talk to everyone about adjustables. If you're looking for a 30-year fix, which most people are, or now they have 40-year fixes or interest only, make sure you're consistently asking them the same questions. We want to make sure you get the best deal, because that's where real estate investing becomes successful for you, easier for you, because the more money you make on each project helps you get to the next project, or just helps your life, enjoy life more. So we have a download for you where we have these questions. So you just take the sheet, upload it into an Excel spreadsheet or whatever, so you can go through and ask them. So if you want a free download, just check below. We just want to make sure you're getting the best rate out there. Also, if you're looking to keep up to date on rates, they've been fluctuating like crazy this last year. We have a monthly report that goes out, and we could even modify it to go out weekly for you. If you're looking for what are the best rates in DSCR conventional, what's the highest loan to value, what is the lowest credit score, any of that information we have in this report. Once again, just email me and just say, give me the report, and I'll get you on the list and get it out to you if you want it weekly or monthly. I hope this video helped. If you're really interested in DSCR, we have a lot of other videos out there that could help you.